Hello and welcome to Enrich Academy. This video will give you a brief idea on the launch of MCX METLDEX in the commodity market on 19th of October 2020. So what is Metaldex and what are its features? Now we are all aware that MCX had launched MCX EKYC Bullion Index or the MCX BullDex in August, which was most welcomed by broking firms and trading community as a whole. Well, the countdown begins as the exchange is all set for the launch of futures contracts with the MCX EKYC Base Metal Index, which is called MCX METLDEX. Now, contracts expiring in November and December 2020 and January 2021 will be available for trading from the 19th of October as per the exchange. So what are the base metals traded on its platform? Trading is done on copper, nickel, lead, zinc, and aluminium. As per the exchange, each contract will commence on the 15th day of the month after the contract is launched, and trading would take place Mondays through Fridays from 9 a.m. to 11:30 or 11:55 p.m. So let's have a look at the key features of MCX METLDEX to better understand this concept. The symbol, as we all know, is MCX METLDEX. The underlying index is MCX EKYC Base Metal. Now, as mentioned before, the start day of the contract is the 15th day of contract launch month. But in case the 15th day is a holiday, then the start day would be the next working day. The last trading day would be one business day prior to the start of rollover period in the underlying constituents index. So what does rollover mean? Rollover is moving from the front month contract, which is near the expiry date, to another contract in a further out month. So basically, you're carrying forward your futures positions. This means you close your position in the contract which is near the expiry date, and you open a new position in a further out month contract, which is similar to the previous contract. Now, as you all know that there is an expiry date when you trade with futures and options. The trading period is Mondays through Fridays, and the trading session or time is from 9 a.m. to 11:30 or 11:55 p.m. as mentioned before. The trading unit for one lot is Rs 50 MCX EKYC Base Metal Index, and the maximum order size is 80 lots. Now let's have a look at the daily price limits. The base price limit would be 4%. If the base price limit is violated, the relaxation allowed is up to 6% without any cooling off period in the trade. Now, what happens if the daily price limit of 6% is also violated? In this case, after a cooling off period of 15 minutes, a relaxation of up to 9% is permitted. A final point to note is if the price movement in underlying commodity index is above the maximum daily price limit of index futures, which is at present 9%, the price limit of the index futures is further relaxed in steps of 3%. But this must be informed to the regulator without any delay, which means this relaxation of 3%, which is done in steps, must be informed to the regulator immediately. Now let's look at margins. The initial margin is minimum 5% or based on span, whichever is higher. The extreme loss margin is minimum 1%. Now there is also additional or special margin. In case of additional volatility, an additional margin is given on both buy and sell. A special margin may also be given on either buy or sell side. The index value is approximately 12,000 and the contract value is approximately 6 lakhs. Margin percentage is 6% approximately or based on VOR. And the value of margin is 48,000 approximately or based on VOR. Now let's look at open positions. So what is the maximum allowable open position? Well, if you are an individual client, you get 1,000 lots or 5% of a market-wide open position, whichever is higher, for all the MCX EKYC Base Metal Index futures contracts combined together. And if you are a member, collectively for all the clients, you get 10,000 lots or 15% of market-wide open position, whichever is higher, for all MCX EKYC Base Metal Index futures contracts which are combined together. Now let's look at the due date rate. The underlying index price arrived at is the final settlement price, which is based on the volume weightage average price of the constituents of the underlying index between 4 p.m. and 5 p.m. on the expiry day of the index futures contract. The settlement of the contract would be in cash. Now let's look at some of the benefits. There are no transaction charges up to January 2021, and the contract size is comparatively smaller. As mentioned before, the settlement is done in cash, and the contract is 5-in-1 contract, which means 5 metals in one index. And the final benefit is an arbitrage opportunity between underlying and index, which is similar to the earlier mini and mega spread. So with the introduction of Bulldex and Metaldex, we are sure that the exchange is likely to get more serious participation, which will definitely add depth to the commodity derivatives market. Hope you now have a fair idea of what Metaldex is. If you found this video useful, do like and share and subscribe for further updates. Thank you.